Good day, everyone. My name is Yves Rougerie. I'm the president and CEO of Vision Lithium, a junior exploration company on the TSX Venture Exchange. I'm here today to speak of the press release we put out this morning and make a quick presentation on our project to develop and mine the SIRMAC lithium deposit in northern Quebec. So we'll go ahead here and do the presentation, and after the presentation we can have a Q&A session for questions and answers. The forward-looking statement, obviously, we put out a preliminary economic assessment, and there's a lot of forward-looking statements in there, and so the reader should be warned about the risks associated with that. I'm the principal qualified person for the company, although the PEA was done by independent qualified people from a different firm. Our capital structure is approximately 34 million market cap, 245 million shares issued. We have close to 50 million warrants, which are in the money. Some of them, at least, and most of them, about 40 million in the money at 5 cents. And so that's $2 million that we expect to see people exercise in the next coming months. They expire this year. And fully diluted, we would have 312 million shares. And the share price right now is about 14, 15 cents. So if we jump into the technical information, the SIRMAC property is on the lower end of the slide here, and within that, the general area of James Bay in Quebec, where there's now at least 3 large, in the northern part, large lithium sectors or areas. The one in the middle is where there's 3 major deposits being developed to production right now: Nemaska Lithium, Galaxy Resources, and Critical Elements. To the north, on the top of the map, is where the discoveries by Patriot Battery Metal and Adina Winsome have been done. And on the southern part, in the more accessible areas with road access and ready close by infrastructure, are the Mobiland deposit and our property, the SIRMAC deposit. We acquired the SIRMAC property from Nemaska Lithium back in 2017 and have been slowly advancing it since then. Overall, the idea between the preliminary economic assessment was a demand that came to us late in the year last year for direct shipping material. So people were willing to buy the rock directly without any beneficiation, no upgrading, no concentration, no nothing, just buy the rock as is. And so we looked into it, and what we found was that there was some pretty spectacular auction sales, to the point where Core Lithium sold 15,000 tons at $950 US back in late December of 2022. So based on that, we got really interested, and we decided to do 2 things. The first thing was to start a PEA to determine the economics of the project, and secondly, to start a permitting process for a bulk sample. So here in Quebec, we have a couple of types of permits that we can get. One of them is an early stage exploration permit, and we've applied for that, are in the process of complying with all the obligations towards that permit. And we expect to get that permit sometime in the first half, and that should allow us to extract a sizable bulk sample from the property in 2023. So the PEA, as I said earlier, is based on the direct shipping of unbeneficiated material. And we just got that report last week, and we're pleased to put it out today. We put it out with the press release. And the highlights of that, of course, is a tremendous pre-tax IRR of 840% and an NPV 5% of $183 million Canadian, with a very minor payback period. The reason for that, of course, is that because we're not beneficiating the ore, we're basically not putting any infrastructure in place, and we have basically no capital costs. So our mining costs themselves are very low as a quarry, drill, blast, and load, and transportation operation. And at this point, we are in advanced discussions with several third parties interested in the offtake agreements. That's how it all started out. People approaching us, interested in the material, and we've engaged in those discussions since then. The reason why this is an interesting project and it has the ability to do what we want to do with it in the short term is location and infrastructure. We have road systems that go by the deposit right up to it actually, and allow for trucks up to 150 tons to carry materials on those roads. So that means that we'll have no issues in terms of restrictions for transportation. We can transport a lot more at a lot more cost efficient basis. This is what the dike on the lithium property looks like, SIRMAC. It's a large dike and overlooking the lake down to the bottom there. That's easily 100 meters in elevation differential. Another image here shows the dike with the extent of historical drilling on this dike. And as you can see, most of the drilling has been done exclusively on the number 5 dike, but you can also see that there's a whole lot of additional large dikes on the ground that have barely been touched and evaluated. And so we see a lot of potential on those dikes as well, because they're in the same geological regime as the number 5 dike. This is work done by Nemaska back in 2012, and actually Nemaska is one of the main reasons why we can advance this project in the short term, because they are the ones who did the deforesting and the stripping and trenching and cleaning of the outcrop to the point where it's basically ready to go from a mining standpoint. All we have to do is go in, drill, blast, and transport. This slide shows over a 200-meter strike length of the dike, excuse me, sampling. Each red dot is above 1%, and the average, I think, of half of those channel samples stretches is above 1.4%. So very, very high grade outcrop. The report also restated the mineral resources of the property. So as you can see, it's not a large deposit by any stretch. In total, we have 273,000 tons of measured and indicated at 1.38% lithium, and another 49,000 tons of 1.05%. So it's not very big. The thing about it is there's an opportunity in the market right now to exploit materials such as this at a profit. And that's what the PEA highlights, that because we have very low capital costs and very low operating costs, and the value of the material is very high on the world markets, in the end, you end up with very high IRR and NPVs. And that's what these show. The after-tax NPV at a 5% discount is $105 million with an IRR of 484%. So that shows how robust the operation can be, and hopefully will be as we go forward. And the revenue as much as $250 million based on the assumptions that we've made. This is a simple plan of the site layout. We have 4 pits. If you look on the right-hand side here, the mineralized material, pits 1 and 2 are basically 90% of the operation. And so there's no expectation or necessity for us to mine numbers 2 and 4. But eventually, when we get near the end of the operation, it's worth it or it's not. So we'll just see. But the vast majority is in just 2 pits, which simplifies the whole operation. And as you can see, there's essentially no infrastructure. And I said pit, but they're not actually pits because they're above ground. They're hills. They're mounds and hills. And therefore, we're actually cutting down and not going down. And that makes a big difference in terms of strip ratio. A review here of the cash flow model. And as you can see to the right here, 320,000 tons of material that would be mined at a grade of 1.33 on average, with a strip ratio of 2.7, which is quite low. I believe it'll in the end be lower than that because of the shape of the dike and basically the lack of any rock and overburden overlying it. I think that in the end we'll have a much lower strip ratio than that. The revenue start, we're using a DSO selling price of $590. The consultants or the independent consultants that did the PEA basically used a lot of the information that we provided them from feasibility studies from projects near us, as well as what's going on around the world, and picked a price that is reflective of that. The exchange rate, of course, and the DSO selling price in Canadian is just short of $800. We were impressed with that ourselves as well. We have a small NSR royalty on the property. However, we have acquired that royalty in the last couple of weeks, and it will not be an issue going forward. So here, the big thing that makes the difference for a project like this one is the mine operating costs are only $140, and I think we've been quite generous in those costs, with the shipping being more than 50% of the cost, and actually going up higher than that the further we transport the ore. So $142 over 300,000 tons, that gives us a total operating cost of about $45 million. Our CapEx is minimal. Basically, there's nothing to be done there because we're not building anything, we're not digging anything, we're not adding anything. So it's just minor expenditures for road upkeep and a few minor things. So for the whole life of mine, we're looking at $3 million of CapEx, and that makes a big difference when you get to the sensitivity studies for the IRR and the NPV. The economics now, the cash flow, excuse me, as you can see to the bottom right, we get a cash flow before tax of $205 million. Taxes are pretty expensive in the end, so we end up with a cash flow after tax of $118 million. And that's where we drop down to a 484% IRR and an NPV of $105 million. We've used a 5% NPV, basically because the project has very little risk. It's all based on price, and as long as the lithium price is high or continues to be as good as it is now, this is a viable project going forward. This is exactly what the sensitivity analysis graphs say. Basically, if you move the price up and down, it doesn't affect the capex or the opex in the least, essentially. And the only thing that affects the valuation, excuse me, of the project is the price. And even with the dramatic increases and decreases, it still remains quite high. Further east on this property, about 5 kilometers away, we have another zone. This is just an example of the potential of that property to host multiple deposits. We're not happy with having only 300,000 tons in the main deposit, but we truly believe that there's significantly more to be found there, and hopefully and possibly a very large deposit, just like the ones we see everywhere else in the James Bay region. A little point here about our second major property, which is in Manitoba, called the God's Lift. It's a historic property. It's in the northern part of the province. You can see it in reference to Frontier Lithium to the south, to Snow Lake Lithium to the west, and of course Winnipeg and the Tegel mine to the south. This project was worked 60 years ago, hasn't been worked since. Inco did the work and drilled 25 holes along a dike that was 2 kilometers long based on their drilling, and it's economically mineralized over 1.5 kilometers, so basically 1 mile along strike. And the drill holes give a zone that's 11 meters on average true width, and mineralized down to 800 feet. Most of the drilling's only been down to 400 feet. So they came up with a resource, or a consulting firm after them came up with a resource of 9.5 million tons, short tons, of about 1.2 diluted, excuse me, with a weighted average true width of over 11 meters. And based on the fact that it was only drilled down to 400 feet for the vast majority of the holes, and that the best hole drilled was down to 800 feet, we believe that there's a clear potential to expand the deposit significantly from this 9.5 million short tons. Going forward this year, we're full blast working on the development of the SIRMAC property. The PEA supports our plan to do a 50,000 ton bulk sample. We're working with customers to qualify product. We've done lots of metallurgical work on this material. It's very high quality. It's very high grade in the upper part where we would take the bulk sample. And we would also like to continue our work within the property limits on all these multiple dikes that are already known but not worked. But there's also very many dikes that are probably not yet discovered. And we would also start initiating the field work for permitting for a mining lease. So this first permit that we're going for this summer is going to be for an exploration bulk sample. But then in order to mine the rest of the deposit, the full deposit, we need to do we need to get a mining lease, and that will require some permitting, which will add at least a year onto the project. And secondly, the Goslith project, we're negotiating an exploration agreement with the local First Nation. And once we can get that, we hope to have that this year. We'll submit an exploration permit and go a full blast on moving that property forward, because we believe it's easily a 10 to 15 million ton deposit and has that potential, and that would reflect very significantly on our market cap going forward. So that's the presentation, and now we could go on to the Q&A if you'd like. Oh. So I don't have any questions on my, I don't see any. Okay, so you can write in a question for those who would like to. I don't think there's any way for them to ask them verbally, are they? Are there? No. So why, yeah. Why was the low number of 591 used instead of 951? Well, because it's a technical report, and therefore you don't use the maximums. I mean, you know, we could have used, let's say, the price of lithium carbonate like 2 months ago when it was $90,000, and use that to work down the number to get an enormous number for the value of this direct shipping material. But that's not what the real world was saying. So when a technical report is done, they use discounted numbers, both for everything basically within the report. And in our case, we used within a range of prices that were used in feasibility studies around us and elsewhere, what we see in print for the scale prices and things like that. And we came up with a price of about $4,100 US a ton, and by using a calculation, which is in the press release, where we use that price, transform, and multiply that by the concentrate, what kind of concentrate we could make with that material, and multiply that by what the company would pay, because the end contract offtake buyer is going to, you know, not pay 100%, because he has to make money, one, and he has to assume a risk too. So the price is all based on those different parameters, and therefore we think the 591 is reasonable, and we're actually quite impressed with the result based on just that. So if you applied the extremes, such as we see on the market today, you would come up with even more outrageously high IRR and NPVs. Another gentleman wants to know how the negotiation has been going with the First Nations in Manitoba. It's a slow process. The pandemic has put a wrench in just about everybody trying to work with First Nations across the country, and that's been the case with us as well. So we're in communications. We're trying to move things forward. We have different people helping us to not to lobby, but to interact with the First Nation. And we believe it will result, you know, it's the way to do business with First Nations today. And I think it'll result in a successful realization of an agreement between us and them. And we think that there's a lot of potential there for everybody involved, a lot of upside. So we'd like everybody to get in and share in the wealth. From another gentleman, the other pegmatite dikes, any indication of lithium in them? Well, as I showed you, the last slide there from the east zone we have a bunch of small dikes there. They're less than 5 meters in true thickness, but they're well mineralized on strike and going down. So they're excellent indication, and that's 5 kilometers from the main dike. So between the main dike and that, there's multiple large dikes, and we're looking at reinterpreting a lot of the information. Very little work done on them, basically. And we think there's a lot hidden as well. The whole area is covered by a glacial sand cover. And so, and lithium dikes are very hard to find if you don't see them. So we think there's a lot of upside. And we think we have new ideas as to how to model the way the mineralization occurs in these dikes. And so those are ideas that we're going to transport forward in the exploration as we go forward this year. in the next few years. But we do believe that the potential for discovery of more significant mineralization, and hopefully much larger than what we found to date, is very good. Next question is that the initial project has a small mine life, but is there room for this to grow in scale? Excuse me. Not right now. We don't have additional resources to work with, but we do believe eventually, yes, there will be more resources worth exploiting on that property. But in the short term, what this is a huge benefit to a small company. I mean, I don't think, this is an opportunity. And we in this business, a lot of times prices go up and everybody gets excited and jumps on a bandwagon. And by the time they start getting things together to do reports or to get mining permits and everything else, the price drops. And then everything dies. And then 5 years later, it starts up again, goes the other way. So this is one of those opportunities. The difference is that because we have a small deposit, we're not high grading part of a large deposit and basically risking the feasibility of that larger deposit. What we're doing is benefiting or trying to benefit from a tremendous economic opportunities, which is the high lithium prices between now and how far? 2030, 2025, who knows? So because we have a very simple project from a permitting standpoint, we can get it permitted faster than most others. Because we have no infrastructure costs, we have no risk up front. So we can get this all done and move it forward in a very, very positive way and make a huge amount of cash flow for the company. Something that you rarely ever see in a junior miner like this. So thank you for that question. And that's it for the questions for now. Are there? Oh, I gotta go down here. Yeah, sorry about that. And I talk about direct shipping material. How far would it have to be shipped to be milled by a third party, ABEPF close or overseas? Those are the options. So in this PEA, we've used two options. One, transport it just to Chibougamau, and to us that's representative of potentially just shipping it here within the Abitibi. So there's only one operating concentrator mill in North America right now. It's in the Abitibi, but there's going to be 3 operations near us within a couple hundred kilometers to the north within the next 2-3 years. And so there's all sorts of possibilities of development of that process nearby. Therefore, and that's what we would prefer by far, because that would limit our costs. And we also have a second scenario where we send it to Saguenay, which is a deep sea port right in Quebec, and it's the closest port to us by far. And we can get it there for, again, a very low price. That would bring our costs up to, our operating costs up to $235 a ton, which is still well below the value of the material, and still gives us a very high IRR. In that case, it would be loaded onto ships, and then it's off to the races, basically to whomever the third party acquiring this could be, and it could be more than one. We think we can make the equivalent of 50,000 tons of concentrate from these 300,000 tons more of material, and therefore, it can be sold in lots, and it can be more. It can be for more than one buyer. But clearly, the European market, the American market, everything is heating up, and the demand is going through the roof. And so the likelihood of there being opportunities to sell this material and for new concentrate facilities to show up everywhere is quite high. So we're pretty confident that we'll be going forward. We have 3 organizations we're talking to, and we haven't really looked for others because they're very serious. But if we have to, I think we won't have any trouble finding a lot of potential takers. And the last question here I see is, what does the next 6 months look like while waiting for the bulk sample permit? Well, we started the bulk sample permit in the fall, actually, and so we're basically waiting for some communications now, and we expect from our specialists who are well known and well recognized and well respected in that area, who did the work for us to prepare for the permits. We should have those permits by the spring, and the spring is just around the corner here. So we expect and anticipate and hope that we will have the permits to advance the bulk sample by the spring, and then we'll be in full prep mode to get this thing going and to get the operation going for this summer. So the plan is to extract that bulk sample this summer and to transport it, ship it to whomever will be the lucky winner, as far as we're concerned. Oh, I think there might be another question. I don't know how long we can go on here. Are the other known dikes on the property showing interesting lithium results? So we have these very large dikes, which are subparallel to the other ones, which we have sampled, and they come back as the same type of dike, which is an LCT type dike, so lithium, cesium, tantalum, which means that they're at the right level for the mineralization to occur. And they just don't have the lithium on surface. But we're looking at our main dike, and the fact that it is limited in size and scope, and so we're rethinking the model for the occurrence of the deposits, and we believe I very much believe that there are bodies, pods, whatever you want to call them, zones of lithium mineralization within those dikes, and it's just up to us to find them. So we have to figure out the smart way to find them, and then prove up what size they are. So, you know, there could be multiple zones of the same size as the number 5 dike. They could be smaller, they could be bigger. And we're hoping for a big one hiding behind or below a sandbank somewhere on the property. And that would be the last question. Yeah, I think so. So thank you very much. Much appreciated. Take your time to listen to our story. I hope you find it interesting. We are certainly very excited about the opportunity here and the potential for huge cash flow for the company, which would allow us many things, such as not doing any financings going forward, being able to do all the work we need and want to do on this property, but also finance the work on the Goslith property with all its tremendous potential and the benefits that would do for the company in both cases on our market cap and for our shareholders. So thank you very much.